as I was mentioning, is up nearly 10% this year so far. And apart from that, crude oil prices, remember, after falling below that $75 per barrel mark, they've rebounded yet again. There are fears of global supply concerns on account of tariff war between US and China. But apart from that, several global factors impacting not only crude oil market but also industrial metal market. We'll discuss all that and more with Kunal Shah, Head of Commodities Research at Nirmal Bang. Mr. Shah, thank you so much for taking your time out and joining us here on ET Now. And first up, let's talk about gold. In fact, we were just discussing that Goldman Sachs expects gold prices to touch $3,300 per ounce by the end of this year. You tell us, what does your assessment suggest, and what is your target price when it comes to precious metal market?
We are of the view that gold prices are heading much higher than this. $3,000 was our conservative target. Every day you see that Trump is coming up with an announcement on like new tariff on some of the other things. So this is very bullish for gold. It creates a lot of uncertainty, and the expectation of the inflationary environment going forward in the US looks very likely scenario. So in such kind of scenario, gold prices generally tends to do well. There are a lot of uncertainties on monetary policy front, on the inflation front, on the tariff front, and this will continue to drive gold prices. We are expecting $3,000 to be tested very soon, and eventually it can go on and test $3,100 also during this year.
And what's your outlook when it comes to silver? Silver has underperformed as compared to gold, and do you expect the trend to reverse going forward?
Yeah, we expect silver also to do very well going forward. 1 lakh rupees on Indian bourses is very much on the cards. And our targets for this year is 1,15,000 rupees on MCX. If you look at the demand and supply side, the supply stands at 73,000 tons and demand is 77,000 tons. So there's a deficit of 4,000 tons as far as silver is concerned. So this is very bullish as far as the fundamentals are concerned. And as far as the uncertainties are concerned, bullions are tend to do very well going forward.
Expected to do very well, and your outlook when it comes to gold as well as silver is very positive. And shifting focus to Brent crude, then we saw that blip come in over the last few days. Increasing supply fears is one of the reasons, and remember there are fears of peace talks. Of course, that's a positive for the global market, but negative for Brent crude. What's your outlook when it comes to Brent crude and natural gas?
We remain quite optimistic about both commodities, and going forward, you've seen OPEC Plus has already delayed the production hike which they were supposed to do. US Permian Basin is seen showing a peak oil theory where the production is not moving up in spite of Trump saying drill baby drill. So the supply side going forward continues to remain a little tight, and as far as the demand is concerned, it is very strong. So we are expecting WTI to test 75 and Brent to test $80 in next 1.5 2 months.
$80 per barrel is your target when it comes to Brent crude, but do you expect production to increase? You did speak about US increasing production. In fact, OPEC Plus has also said that they will be further delaying their production revival, which was slated to happen from the 1st of April. What's your outlook when it comes to demand supply situation?
Yeah, the same thing, because we are not expecting oil production in US to move up sharply. In fact, a lot of these shale basins are showing sign of exhaustion, and the possibility of increasing production from shale oil is going to be very difficult task. So either the production is going to remain stable or stagnant, or it is going to go down. So I don't see a base case scenario where the production is going to increase from US. As far as OPEC Plus members are concerned, I'm not expecting OPEC Plus member to increase the production because of the low price. So the outlook remains very bullish.
Remains very bullish. You do not expect production to inch higher, and $80 per ton is the target as far as Brent crude is concerned over the next 1.5 to 2 months. But shifting focus to industrial metals, then Trump recently announced 25% tariffs on steel and aluminium, and apart from that, there are fears that perhaps import duty could also be levied on copper, because of which on a year-to-date basis, copper is up nearly 8%. What is your outlook, and how do you expect these moving factors to shape up for industrial metals?
I think industrial metals, if you see what is happening, is that there is a big differentiation between the price at London and the price at New York. So copper is trading almost 9 to 10% premium in New York on COMEX as compared to what are the prices trading on LME. So the tariff has led to buying from the US. All the the end consumer have been buying copper. So in near term, we believe that the possibility for copper to move up further remains very high. And we can see levels of 880 to 890 going forward on MCX. We recommend buying copper at 860 for the upside target of 880 to 885. And stop loss should be placed at 850.
Your outlook when it comes to zinc, because it is one of those base metals which has fallen on a year-to-date basis by about 4%.
Zinc, we are not optimistic because the steel production in China is going to go down. So the zinc demand is not going to do well. So the upside is very limited in zinc.
So you're not very positive when it comes to zinc. And one last question on Chinese real estate demand. Despite several measures that Chinese government has taken, we have barely seen any green shoots. What's your outlook when it comes to Chinese steel demand led by real estate demand and its impact on iron ore prices?
Yeah, so the Chinese steel demand is going to remain muted because the new construction is not going to take place aggressively. The old completion of the projects will take place. So demand side doesn't look great. But the dumping may continue in the other Middle East economies.
Understood. So you don't expect any revival in demand from China. Mr. Shah, thank you so much for taking your time out and joining us here on ET Now and helping us decode what the outlook for commodity markets look like.